Good morning, afternoon, or evening, ladies and gentlemen, depending on where you're joining us from across the world. Thanks for joining a Payments, Cards and Mobile webinar in association with BPC. I'm Rolfe. I'm the Managing Director of Payments, Cards and Mobile, and I'll be hosting the webinar today. From myself and all the panelists, I hope you're all doing well. A couple of housekeeping items as per usual before we get started. The first to note is this is a live event and we'll have a live Q&A session at the end. However, please do feel free to send your questions in as we go along. You should see a chat box and you can pose your questions in there. If your question relates to a specific topic or speaker or slide number, then please note that down in your question as well, and it allows us to quickly reference back whilst answering the question. One final thing to say on that is all of the assets with regards to this webinar will be made available at the end, which meaning you can share with your colleagues or you can review the information again at your leisure. And also in that chat area, you should see a little note saying handouts, and there's a couple of handouts that you can download and review right now as background information and supporting content for this webinar. Okay, so on with the show. The emergence of Phygital concept has become a game changer in the business world. In the current business landscape, COVID-19 pandemic disrupted physical interactions and supply chains prompting digitization as a natural response to that. Yet, despite the ongoing march towards it, physical interactions remain essential in consumers' lives, especially for SMEs and the retail sector. Projections suggest that by 2026, 24% of global retail sales will occur exclusively online, leaving 76% still seeking in-store experiences. Surveys by Global Data affirm this trend, with more than 30% of consumers preferring to inspect products in-store before making a purchase. So the Phygital experience comes from any online to offline or O2O strategies. And some examples of these are click and collect in stores, self-checkout in retail, zero branch interactions in banking, NFC devices for city services, biometric security scans, AR experience through wearables or mobile, e-government services, digital kiosks for issuing payment cards, as just a few examples. We note that the Phygital market is expected to grow to over $200 trillion within the next 5 years. And with this increase in volume and popularity of digital payments from consumers, creating an effective Phygital strategy for neobanks, traditional banks, retailers, and SMEs is essential to winning and retaining customers and employees in this new retail landscape. But during the webinar, we will be discussing how to build the Phygital ecosystem and why establishing partnerships is important, how digital micropayments drive payments revolution and financial inclusion and where it's heading, regional experiences and success stories, and the best retention and onboarding strategies for B2B businesses looking into going Phygital. And here to walk you through these two topics are two gentlemen who are experts in their field and the subject matter. I'd like to introduce Imran Vilcassim, Global Pre-Sales and Business Development, Digital Banking at BPC, and Henry Erimodafe, who's the founder at ABrod, who's based out in Switzerland. Imran, I know that you have a few slides to set the scene, so I will hand over to you.
Thank you, Alex. Good afternoon, good morning, and good evening, everyone, depending on where you're joining us from. My name is Imran. Thank you all for joining. I just have a few slides just to set the terminology right, and we'll also get into some questions and comments as well at the end of it. So let me kick off. Let's get the terminology out of the way first. So Phygital, obviously a term derived from the combination of the words physical and digital, refers to typically a business strategy that seamlessly integrates the best of the physical world and the digital world to create what we call as a unified customer experience. Now the goal of the Phygital approach is obviously to leverage the strengths of both the channels, both the physical and digital channels, to provide your customers with a seamless and convenient experience across various touchpoints, be it offline or online or combination of, right? So this is just to get the definition out of the way. Now let's also look at a few use cases of the concept of Phygital in banking. Now most of us bank, we do some form of banking in one way or the other. Let's look at the first use case, which is talking about bank transformation or omnichannel banking. The physical world is that you go into a traditional brick and mortar branches or conventional branches, or you would go to an ATM and start doing your transactions. In the digital world, you're talking about online and mobile banking platforms. Banks are essentially redesigning their branches to be more than just transactional spaces. They're incorporating digital technologies such as interactive screens, self-service kiosks, and video conferencing to provide a more engaging and efficient in-branch experience. A few years ago, I remember BPS Bank in Singapore has transformed most of their branches into lifestyle spaces. So customers can not only come in and do transactions with or without an agent present, but they can also enjoy and sip a cup of coffee and also do some work there through co-working spaces. These are the new experiences of Phygital that the banks are leveraging. Let's also go into the second use case. You're talking about digital onboarding and account management. There is still a significant amount of people who prefer in-person account opening at branches or with an agent. But there is also complementary digital experiences which we all know of, and obviously the numbers skyrocketed post-COVID. The whole aspect of online account opening and management. Many banks are now allowing customers to open accounts online, leveraging the digital verification process. So, for example, some time ago, JP Morgan Chase introduced a fully digital account opening process for its FinBuy Chase mobile application, which essentially provides seamless, non-physical digital onboarding experiences for customers, right? Then if you look at things like personalized digital services, you'll have in the physical world, you'll have in-person consultation with bank representatives. In the digital world, you could potentially use or leverage technologies such as AI to create digital financial advice and create service offerings. So here you're looking at banks using data analytics and artificial intelligence to offer personalized financial advice through digital channels. Now, a good example of that would be the AI-powered bots of Wells Fargo, which essentially provide customers with personalized financial insights and recommendations. So you have the best of experiences in the physical world. You also have the best of experiences in the digital world as well. And you combine all of this together to create that unified experience. The last example I like to cover, and it's not just that we have 4 examples. There are many more examples. I picked the most relevant 4. You also have contactless payments and wallets. You still have traditional card transactions. These are your typical debit cards or your credit cards, your prepaid cards, which you use in your day-to-day life. Then you also have contactless payments or mobile wallets. So doing a QR payment is considered a digital payment. Doing a mobile wallet transfer is considered a digital payment. So banks are also now integrating digital payment solutions to enhance the speed and convenience of transactions. So if you look at Apple Pay, Google Pay, and other digital wallets, these tools enable users to make payments using their smartphones or even smartwatches, reducing the reliance on physical cards. Now, these are some use cases in banking. Quickly, we also move to a few use cases for SMEs. Now, if you look at the first example, we're talking about, we're talking about online presence or e-commerce. You have an SME today who has traditional brick and mortar store or an office. Then you complement that with an online presence through an e-commerce platform or a website. Take a very simple example of a local boutique who can establish an online store, enabling customers to browse through products at the comfort of their homes. You could also potentially integrate this with your social media channels and drive a much more enhanced online user experience. Then you also have the typical click and collect or buy online pickup store scenarios. So here the physical one is that you have in-store shopping experiences complemented by digital experiences like online ordering with in-store pickup, right? Here you could think of a local electronics store who can implement a click and collect system, allowing customers to browse and purchase products online, but pick them up at the physical store itself. They can inspect the quality, the state of the product before they actually pick it up and take it away. Then you also have augmented reality experiences. I think this furniture company, a furniture store can develop an AR app. I know IKEA did a few of these. They can develop an AR app that allows customers to visualize how furniture items might look like at their residence, even before we actually buy them. Now, the example of that is the advantage of that is the customer need not actually visit the store. They could actually fit the whole furniture through augmented reality experiences in their home and see how it fits. The store does not necessarily need to have a lot of space to, store all these furniture, because now they're providing all these experiences through augmented reality capabilities. Then we've also got aspects like collaborations with digital platforms. In the physical world, this could be around local partnerships. In the digital world, we are talking about collaboration with digital platforms. So, for an example, you could have a local fashion boutique who can partner with an online fashion platform to reach a much larger audience. Now, the collaboration allows the boutique to tap into the platform's existing customer base and increase visibility. So, these are some examples of Phygital in the world of SMEs. Now, keep in mind, a typical Phygital strategy would entail, firstly, fundamentally understanding the customer journeys and preferences. And then once you do that, you look at optimizing the synergy between the experiences you provide through physical channels and digital channels. Now, as you and I both know, technology continues to evolve. So it's also important that we also look at adapting based on technology advancements. There is one fundamental goal in everything that we do, which is essentially providing holistic and seamless experiences, combining the best of the physical channels and the digital channels. Payments, as you know, it goes without saying, payments or micropayments becomes fundamental in everything that we do here, which we will cover in a few minutes. Now, we spoke about use cases of Phygital in banks. We spoke about use cases of Phygital in SMEs. How do we also bring this together? So how can banks partner SMEs to enhance digital experiences? Number one, banks could potentially use digital platforms like marketplaces to help take SME businesses online through digital tools for better market access, so expanded market access, and also the way SMEs conduct business. There is also the aspect of digital account opening or digital account management. If you take as an example, Bank of America, they came up with a platform called Business Advantage 360 some time ago, which was an integrated digital platform that provides SMEs with comprehensive view of their financial data. Also provided tools with access to live financial experts. So anytime an SME has an issue or a clarification, they have immediate access to these financial experts to help them run their business. Then there is also the aspect of online loan application. So with digital document submission. So HSBC some time ago came up with something which is essentially a digital lending platform for SMEs, allowing businesses to apply for loans and receive approvals completely digital and online. Then we've also got digital invoicing and payments tools. So again, a good example of this would be JP Morgan came up with a product called Vilcassim, which is a very simple tool enabling SMEs to accept card payments on the go. Then there is also integrated financial management software. Most SMEs are also individuals, may not necessarily have the right financial background to run a business. These banks, or BBVA, which is a financial institution based out of Spain, came up with a tool essentially providing SMEs with accounting software for real-time financial data insights, and also helping them manage their cash flows. Right? So this is how banks can leverage all the capabilities and the technology expertise they have to help SMEs in a world of Phygital. Right? Move on. So if you look at the role of digital marketplaces, right? There's a lot of things digital marketplaces can bring into an SME. As you try to evolve your business into a Phygital-led business. Starts with very basics of online presence and selling. SMEs leverage the marketplaces to establish an online presence. So today, if you have a local handmade craft store, you could potentially enlist it in a platform like an Etsy or a national marketplace, allowing customers to discover your products easy. Then you can have local partnerships and collaborations. There is also click and collect services, which we spoke about earlier. There's also this new innovation around flexible payments. There is buy now, pay later products. There is buy now, same later products. All of these allowing the era of Phygital truly a reality. Then you also have things like omnichannel selling. Now, this is an interesting one. Through omnichannel selling, you could again make use of the best of experiences that you have physically and also online. So Example, a customer can completely evaluate a product online, make payment for it, come to the store and start picking up the product. All of these things are possible by leveraging a market. Now, if you take a marketplace, there are obviously multiple key actors. Now, this is an important point here. You see the banks here, you see the suppliers, these are the SMEs or the micro SMEs. You have the buyers who are your customers. These can be individuals or institutions. You also have the logistics providers. You have digital wallets, which enables digital transaction between buyers and the sellers or suppliers and the buyers, or with the logistic providers. There are also operators of. Now, if you really look at this is a true example of how marketplace can really enable an era of Phygital for banks, for SMEs, and for them to combine and create that unified experiences for their customers. So example, banks could potentially leverage a tool like a marketplace as an acquiring tool to provide SMEs or micro SMEs who are largely running offline businesses to bring their business online. So these are examples of how marketplaces can help. Now, last but not least, we all know of a global problem, the problem of access to finance. Why? Because most SMEs and micro SMEs don't really have a lot of collateral to be able to submit as data or collateral for loans. So potentially platforms like this could also form the basis of risk assessment or credit decisioning or scoring, which then would allow banks to confidently to also lend to SMEs with low risk ratings as a part of an entire ecosystem. So BPC is a company which I represent here. Thank you again for joining us. We've got a lot of experience doing implementing some of these capabilities that we just spoke of. We have capabilities around digital banking. So we've done some of the stuff that I already spoke about under Phygital use cases for banking. We do a lot of work in the whole space of digitization of government tax and subsidy, which again has a lot of Phygital elements in it. All of this is important. It's important that you have, every time payments are involved, there is always a risk of fraud. So we have our fraud management capabilities. We've got our e-commerce capabilities. We've got our marketplace capabilities to implement everything that we just spoke of a few minutes ago. We've got smart city capabilities to enable micropayments through IoT devices. So for an example, tomorrow you park your car, there is a device out there which allows you to just make your payment and drive away. And then obviously we've got very strong acquiring and issuing solutions as a part of our payments. We serve a lot of customers globally. We serve close to 400 clients today, starting from some of the biggest retail banks to some of the new startup banks like Time Bank in South Africa, e-commerce providers, and also working with a lot of central banks in terms of driving national payments capabilities in their countries. Now, this brings us to a very important topic, this whole topic of payments, and BPC being a very strong payments and technology company. We've done a lot of work in countries and in communities with governments and with private sector associations in terms of enabling the whole payment ecosystem through innovative payment methods to make the whole concept of Phygital a reality. So if you look at role of payments in an era of Phygital, I could pick out three main areas in terms of role of payments in Phygital. So I listed down three key payment instruments. You are talking about Phygital payment solutions. You are then talking about contactless payments. Then you're also talking about easier cross-border transactions. So if you look at Phygital payment solutions, you could think of mobile banking apps which will feature ability to do digital payments when you're online. Then there are also other offline payment capabilities at the store which allows you to accept payments in the most convenient way. So for an example, a local retailer with an e-commerce website and a physical store can use digital micropayments for online sales and in-store transactions, and even facilitate curbside pickup seamlessly. If you look at contactless payments, you would have a cafe who can implement contactless payments whereby mobile wallets can be used to allow customers to make payments without physical cash or cards, and essentially expediting the whole payment experience in store or even for online. Then you also have cross-border capabilities. So if you're an e-commerce platform and you want to start promoting your product globally, you want to accept orders globally in multiple currencies, again, the role of payments in an era of digital becomes that much more important. Now, obviously, each of these topics we spoke of has a lot of as a significant impact on the aspect of financial inclusion. One is it allows you access to proper banking services. You become a part of an inclusive society for banking. It supports the whole aspect of unbanked or underbanked entrepreneurs. You bring them into a formal banking system, thereby they're also able to create a lot more structured collateral for further expansion of business. And they also open up for various other platforms or lending platforms like microfinance and P2P lending capabilities. Now, where is this whole thing moving in terms of payments? Obviously, blockchain and cryptocurrencies are also becoming that much more relevant. You have countries like Nigeria, which are accepting bitcoins for goods and services. Central banks around the world are coming up with CBDCs as a viable way of enabling micropayments. You have IoT devices fitted out in various locations, allowing consumers to make payments for various services like parking, for ride-hailing services, and so forth. Then there's also the aspect of security in everything that we do. With that, I would like to hand this back to Alex. I hope you found this session useful. There's also the handouts that you can also download, but happy to take on any questions later on.
Brilliant. Thanks, Imran. That's a super bit of contextualization there, a real great lead-in. So at this point, I am going to see if we can get our other speaker up on the stage. We have had some communication issues at the beginning, but let's hope they've been fixed. Hello, Henry. We can see you. We can hear you.
Me? Can you see me?
Perfect. Good to see you. How are you doing?
I'm good. Sorry about the hiccups, but we got it fixed somehow. So here I am.
Perfect. And you're just in time to rescue Imran from having to do the rest of the webinar on his own. He's done about 20 minutes of talking. So we've had the scene setting. I know that you've been in the background listening to all of those slides, which I'm going to turn off now so that people can see us better. I think we've got a number of questions that we want to cover off for the remainder of this webinar, and hopefully that gets the crowd excited and they start to send some questions in. But giving Imran a rest here, Henry, let's just talk about classic brick and mortar onboarding and retention strategies have become a little bit outdated with the more tech savvy consumers and this kind of intensification of competition. Data collection and personalization has become more important to win customers as well. So what strategy do you use as an effective strategy for customer onboarding and retention?
Thanks, Alex. And it was very nice to hear you say the stage Imran. So I was taking notes for myself, but I think that's also going to be useful. I'm going to be talking about experiences we've had in our project, so bear with me if I refer to that. When it comes to onboarding of users, KYC, AML, I think that's definitely one of the areas where digitalization is a major role, especially when it comes to access to the data that is collected. And coming from 20 years or plus of private banking, where you used to scan passports and all that and store them in paper form and try to retrieve them after 10 years. We know that in itself is a nightmare. So we move to a world where you can have everything electronically, especially with more and more use of biometric data, with facial recognition. So even in traditional finance, there's a huge value in moving away from physical, so to speak, KYC and authentication of users. What we see in the case of our project is working across the whole of it doesn't even make sense because you have to have a shop in 20-some European countries to do manual or physical KYC for users. So the only way to do it is really via technology, allowing users to be authenticated online. And there are sophisticated methods of doing that now. I don't see, in our experience, any disadvantages so far. And safety of data is very high among most providers. And also for the regulator, I think there's a huge benefit because you can then mine that data. You can cross-use it depending on mission issues and all that. Of course, taking into consideration data protection policies. So that's the future. Immense benefit for the ecosystem, for cross-border opportunities, and in our case, it would have been impossible to do it without. Yeah.
Yeah, and Henry, sorry, I should have given you the opportunity just to introduce what the project is in your company. I'm sorry, I should have done that before I kicked off into that question. So, do you just want to give the listeners a tiny bit of context, a minute or two around what the project is and how you were wanting to achieve it, et cetera, just some background there, please.
Oh, sure, with pleasure. So our project is called ABrod, as in being abroad, right? It's a platform for the African diaspora. And it's quite unique in a sense that the African diaspora is global in nature, right? So you're talking all jurisdictions. So try and bring all that on one platform. In the EA alone, you know how many governments you need to deal with. Then you talk of cross-border issues into Africa. So anyways, what we're trying to achieve with our project is to create an ecosystem where the African diaspora, can orchestrate transformational initiative towards Africa. And the reason for that is if you look at the stakeholders in terms of Africa transformation, is either the government, international agencies like the World Bank, and people back home in Africa. So what you typically find out is there are certain elements that are needed to, transform the economy, like capital, which the governments don't have, or of the local population. And if you look at alignment of interest, I think, as much as the international organizations will try, they don't have that as well. And the only group that unifies all these different elements is the African diaspora, by virtue of the fact that, we work in these organizations, we have capital by virtue of the work we do, and we are aligned in the fact that we want to help move Africa to the next level. So this platform gives the African diaspora the opportunity to actually begin to channel capital into Africa, channel skill sets into Africa, leverage our networks. And also, we do about $150 billion in remittances every year. And our research shows it can be 10x that if it's properly orchestrated. So we're talking 1.5 trillion. Do your research. That kind of money has not hit Africa in the last 10 years combined. So if we pull these off, this will be the single most important thing that has happened for the transformation of Africa in the last 2 decades. So we're really excited about what we're doing, but that makes it very challenging as well. So thank you for asking.
No, an amazing project, and thanks for the background there. And I guess just to pull that together, you went through a process and you selected BPC as your partner for this. So I guess I can draw Imran back in here on perhaps some of those challenges. Henry's expressed certainly what he felt from the perspective of him being the business lead and wanting to get this project off the ground. From your perspective on the technical side of having to balance that with what's possible and how to achieve it, what were your thoughts there?
Well, thank you, Alex. Firstly, Henry, thank you for having faith in us and selecting BPC for this. We were quite moved by the vision. The platform was a lot about Africans building Africans, which we were moved by, and we were obviously quite keen to ensure that we are able to support the team as much as we could from a technology standpoint. Now, Henry and the team has set out a very ambitious yet attainable goal in terms of what they want to do to enable the vision that they've set up. We've got a very strong marketplace offering with most of the capabilities that Henry and the team wants, which are pretty much out of the place, right? We spoke about trade, we spoke about remittances, we spoke about ideas and spaces to bring in
I would like to point out two things, and because you asked what the role of partnerships, why did we get look before we actually got to the point where we selected BPC, we've shopped a bit around the block, and it was a nightmare. So be very careful when you select your partners for executing your project. It could be the make or break. So until we found BPC, we tried a few providers, because by virtue of what we want to deliver, there are so many different aspects to it. The whole onboarding, AML, KYC, there are vendors who specialize in that, right? Then you look at the digital banking. We are a neobank in that sense. So you need to have the license and build your neobanking interface. At the same time, we want to offer cards, because our clients are EA, so they would like to have cards with us. At the same time, we want to be a remittance company, companies who sort of do that as their main business, right? Now, if we're giving Africans in diaspora opportunities to also invest in projects back home, it makes us also an investment company. And finally, just imagine the African diaspora in London or Zurich who is interested in just getting shampoo with a particular flavor or smell that is used to in Africa. It needs an e-commerce site with its payment tool integrator where you can say, ship this shampoo to me from your shop in London without having to go there, a 3-hour ride, right? So try and integrate all of that within one platform. There is none there. And the only partner we found that could do that is actually BPC, because of all the different modules. So there is the marketplace, there is the e-banking, there is the payment, and the whole orchestration layer that's all around it. I tell you, finally, we see a path to delivering a full integrated solution, because the African diaspora wants a one-stop shop. So think of microcredits to people in Africa, right? And at some point, you want to get the people in Africa to also interact with the diaspora. So these are the different elements of what we're trying to build, and it takes a platform like BPC to be able to do stuff like that. So partnerships is key, and we're really happy to have finally connected. You guys are doing very well.
And Henry, if I may add, I think together what we are doing is really impacting a very influential community of people who are essentially the bread and butter of a lot of things we do, which is around the farming community, really connecting the whole ecosystem of farmers with buyers and sellers, who really kind of grow that ecosystem, which is a very socially powerful thing to do.
So, Henry, there you've mentioned integrations. We've touched a little bit on the ecosystem. So I just want to delve a little bit deeper into that. So, building an ecosystem in this instance involves this Phygital experience for customers, that blend of physical and digital interactions. From your business perspective, does that come down to the integrations? And if so, what benefits do those integrations bring, from your perspective?
The key word for a super app is integration, because you're bringing disparate systems together and orchestrating them in a way that you give a seamless experience to the client. So it's integration, integration, integration. So I want to do KYC once, and I don't care if I'm buying shampoo, I'm sending money to family in Africa, and I want to be able to use the same card across, the whole platform. And if we cannot orchestrate the integration layer that, technology becomes invisible to the end client, it needs to become really comfortable, that, I can just do stuff without thinking what is happening behind the scenes, then we're going to have a very big challenge. And what is important, having run IT in some of the big traditional banks, integration could break your project if you don't do it properly. And I can tell you it takes forever. But the experience we've had is because of the robustness of the BPC platform. What we actually talk about is integration. The robust APIs that you have. So it's a matter of configuring those APIs, not building them. And because you've got these clients who are specialized, they're either banks, they are ecosystem players in terms of e-commerce, and we bring all of that together in that orchestration layer where these disparate parts, they begin to talk to each other, and that makes it so unique that you cannot actually copy it. You would have to build all those parts. Now, one of the aspects of this, if you look at the physical part, we have clients in Europe, okay, the diaspora, but also we have clients in Africa, all right? So the farmers in Africa who we want to fund, we need to interact with them. We need to have their data. We need to give them opportunities to also spend the investments in terms of inputs for their farms, right? And if we already have them on the African side and we can onboard them with the regulations on the ground, you've got to integrate that. So you have two stakeholders. You have the farmer in Africa interacting with the diaspora, saying, I need $50 in terms of a microcredit. So happening at the integration layer, and from the application viewpoint, from a super app viewpoint, nobody cares that he's sitting in Nigeria. He's talking to the diaspora. Says, all right, here's $50. You can start selling oranges or roasting corn. But the impact of that is fantastic. And the only way this could happen is having that unique integration layer that makes it seamless and tech disappears behind the scenes. And that's the experience.
Amazing. Imran, a bit on that integration piece. I mean, technically, I guess from what Henry's described, very, very in-depth, very, very complex. I don't want to ask about timings particularly, but I want to just kind of get under the skin of how difficult that was to combine this. It's such a broad project geographically, all of those different bits that Henry touched on earlier on. The level of complexity is great.
Yeah, no, absolutely. Thanks for that. So what we also have as a part of our portfolio is a capability called an integration platform, which essentially is the layer that allows us to stitch together all the different integrations that we need, both with internal systems and external systems. A very simple example of that would be, especially when you're talking about cross-border transactions or cross-border trade, exchange calculations or exchange rates comes in. And then there are services out there which provides it. We've got native capabilities as a part of the BPC platform, which allows you to provide all those services to the customers. And there are also various billing providers, various payment providers that we would integrate to fulfill the entire journey of payment. So as a part of this holistic platform we provide through the marketplace, we've also got an integration layer which allows the whole process of simplification of all these different integrations.
Okay, great, thank you. So I think we touched a bit on the partnership between ABrod and BPC. Again, just coming back to this kind of ecosystem that you're building, Henry, and the complexity of that structure. I wonder if you can talk us through, some of these other partnerships, and I agree that always you have to find the right one, but you mentioned there being a remittance and a neobank, an investment company, a marketplace, etc., etc. how much time and effort has this taken, and just a little bit about the background of putting all those partnerships together in order to allowing BPC to integrate them all together.
I'm sorry, I have
You
off my.
want to take that? Yeah.
Yeah, I had to off my phone because there's some background noise here. At the mall and it's pretty loud, so excuse that. Look, a few weeks ago, actually about 3-4 weeks ago, Max, we were in Chile and we discussed a new opportunity. Just to give you context, and that opportunity was we got these farmers in Nigeria, for example, and they all belong to an association. So we're talking about 14 million farmers who need a platform where they can orchestrate. So you're talking stakeholders like the farmers, you're talking of financial service institutions that will provide them loans. You're talking about SMEs that provide them fertilizers and seeds. You're talking, companies that provide mechanization in terms of tractors and things like that to orchestrate a farming cycle. Okay, so you can imagine where do you start from to build something like that and onboard 14 million farmers? Now, I was surprised we discussed this at the Chile event, and I can tell you as of last Friday, we already have a platform. That's how fast it went, right? We already have a platform which we're testing, and now we start onboarding of the farmers, onboarding some of the other stakeholders. We here talking to the Nigerian government, for example, to have the Bank of Agriculture providing loans to those farmers. And the only way they're going to do that is if you have the farmer KYC properly documented, geolocate them. And from our viewpoint, we go, all right, if I have 14 million farmers, I can bank them, right? So I'm also going to be a bank to 14 million farmers. And then you get them the seeds, and then you do take off from those farmers. So what I'm painting is, also within the solution we are providing, there are partnerships, and those partnerships need to be orchestrated on a platform which is seamless with roles for the different partners, all right? And BPC being the platform on which this runs, this needs to be robust and seamless to make all of this happen. Now, some of the other partners we are talking about, if you look at it from a tech viewpoint, is KYC, for example. So we have a third-party KYC provider, that does the whole biometric facial recognition, capturing of KYC data, and we feed that into the system based on an API, which BPC looks at and takes the data and prepares it in the way that we can, for example, use it. Some other partners, for example, you have your PIN sponsor, you have your card, you need to integrate that. So when people are doing payments in real time, okay, you've got to be able to process all of that, right? And then think of AML and fraud, big area, okay? So we have rules which are also in the BPC system to do fraud monitoring. And then you're looking at on the diaspora side, if somebody is going to send money to Africa, you want to make sure it has a salary or legitimate cash because you don't want it to go through your system and all of that. So there are so many different aspects where we work with partners. You can't build a system like this in 5 years and then having BPC to sort of knit all that together nicely to provide a solution to 14 million farmers in Nigeria, for example. So I think that's fantastic, right?
Sure. So let's come back a bit to payments, and again, referencing Imran's slides there, sort of walk through quite a lot of scenarios where Phygital payments are now being transformed into our lives. So, when looking at your project, what did you start with that, or did that come later? And if you now had the opportunity, would you start again with the payments journey? Like, how important is that payments journey and the in your build of the project?
Mm-hmm. Payments is always a very good starting point because it's a need. So when we started our project, It was really about finding a solution to remittances, which is payments. Um, you know, um, Depending on the country where you live, you pay as much as 9 to 10% in remittance fees. Maybe now it gets better. And you have to physically go to some providers and show your ID and all of that. And we're like, would you have to do that these days, right? With tech, with cards and all that. So we're like, let's make the life of the African diaspora easier in the sense that they can, on their smartphone, hit two buttons and a minute later, cash is in Nigeria. This is being done today in Europe. So why can't we do that for Africa? So it was the first use case that we actually looked at. And for the diaspora, like, fantastic. I'm going there to answer questions every time. When I can answer it once on your platform, and if I want to send cash, I don't need to talk to anyone. And then it gets even better because you can have a bank account with us and the cash is there. So it's just a payment, cash from your account via a remittance engine. Oh, no questions asked because we have your information. We know how much you earn. We know you do that every month, so you can even schedule it without having to sort of think of that. So payment is a very, very good use case. And then we started adding some other components like, okay, what if you want to buy typical African grocery? That comes on the back of that. But at the bottom of that, you always have to have the payment layer because all those contracts have to be consummated and it comes to payment at the end of the day. So I think it's a good point to start such projects. Honestly.
Yeah. And Imran, more generally, those kind of projects that you're seeing coming out, are they, as Henry says, is payments that kind of starting point? Because ultimately those contracts need to be signed with a payment of some sort. Or do you find that people leave it further down the line to implement that? You're on mute, Imran. Sorry.
Open payments are the fundamentals of how all the journeys work. Of it this way, you like something, you want to pay for it, but you can't. It's not a frictionless experience. So payments, most often than not, is the foundation of everything that we build on. Most often than not, the user journeys are also built around the payment instruments to make sure it's a seamless, frictionless journey to complete the transaction. So absolutely, yes.
Okay, so we're going to just focus in on the mobility industry a little bit now. And what we're seeing in that area is this sort of significant transformation with the rise in popularity of microtransactions. So, the question is how do digital micropayments drive the payments revolution and financial inclusion in your region? And where, I guess, in the near future, where do you see that heading?
Is that for me?
Yeah, Imran, let's start with you. Yeah.
Okay, great. No, I think the whole concept of digital micropayments is now taking center stage in a lot of things that we do. So if you look at paying for services such as ride sharing or public transportation or micromobility solutions, these are all digital micro payments. So even people without traditional banking access can still participate in this formal economy, which essentially also then broadens financial inclusion as a concept, right? It also kind of reduces dependency on cash. So micropayments reduce complete dependency on cash, so small transactions. This shift is obviously very beneficial in the mobile sector where quick and frictionless payments are obviously pushed. Again, like I said earlier, even people without traditional banking services can use mobile wallets, like what M-Pesa is doing in Kenya, to kind of transact digitally through micropayments. Then if you also look at things like pay-as-you-go basis, unlocking access for those who may not even afford large upfronts, that's an option. So for an example, conventionally you need to pay for insurance for a year. Now you could also buy insurance for a day, and that also then transforms into a micropay. Then if you look at things like innovations in pricing models, so if you look at digital micropayments, they also enable interesting thing in the pricing model. So for an example, if you take dynamic pricing based on demand, distance, or time, users are actually only paying for what they consume. So if you take a ride from point A to point B, you're actually only paying for that ride, and that's exactly what you consume. And that really requires concepts around micropayments to be a reality to enable such an economy. Let's take one more example. Example around how micropayments can also pay the way for micro insurance and micro loans in the mobility. Like users can now opt for insurance coverage or loans for specific trips or periods. So you could do a situation where you need to travel from city A to city B. There's a certain cost for commute. Let's say it's $100. You could actually get a micro loan for that particular commute, have a repayment plan, fix for that, and essentially execute the commute. So this is what micropayments enable for you now and into the future.
Thanks, Imran. And Henry, I guess you're very familiar with the Nigerian market, and I guess that's one of those markets that's crying out for a more digital solution around micropayments, reduce the cash in the market.
I think the key word there is cashless, right? Because we're still very heavily cash-based. So as society begins to transition, especially with technology becoming cheaper and affordable, we need to go in that direction, and the potentials are phenomenal, right? Once we go cashless, so we're talking of the wallet bank, okay? So as soon as we can use whatever forms of payment, and we see a huge opportunity, because what we realized recently is when people actually send money home, the whole transaction is not about the cash that they remit. It's about the need they are trying to meet. So our approach is don't just do remittance for remittance sake. That business model is going to die very quickly. Or meet the actual need, right? They want food. Buy them food. They want health insurance. Don't send the money. Buy them health insurance on our platform for a day, for that trip, right? So as soon as we begin to offer those services, we're meeting the actual needs. And for diaspora, for example, some of the needs, I want to own a flat. So I keep sending money home and hoping somebody is building it at home. But now if I can just buy the flat and pay for it on the platform, done. So the most important thing is to meet the needs of the society, and payment just becomes a means to an end. And then you see micropayments kicking in mobility, for example. So the experiences in Kenya with M-Pesa, okay, Nigeria is, for example, not there yet because we have the e-Naira project that's sort of still in the development phase, but we hope with the literacy level of Nigerians when it comes to crypto and all that, that when we actually offer such solutions, 14 million farmers, we use tokens, and then you're talking micropayments, yeah, right? So that's going to be really huge so that's phase 2 of our project.
Super, thanks, Henry. Imran, we've got a few minutes left, so I don't know if you want to take the opportunity to kind of finish up. I think looking at it, you guys have obviously been super good at your explanations because we don't have any questions coming in. And to be fair, there's been a lot of content that we've covered here, so I'm slightly surprised by that. But yeah, Imran, maybe just a few minutes of how you see that panning out. And sorry, Imran, yeah, there you go.
Yeah. Henry and Alex, you also spoke, we spoke at net about, right? I'll also maybe take a very different example, BPC and ABrod, maybe a very separate example, something we know. We all know Alibaba as one of the biggest e-commerce platforms in the world. At the same time, the group also has an affiliate company called Ant-Group, which powers Alipay.
Yeah.
Now, this is a great example of partnership. Alibaba obviously being one of the largest platforms in the world cannot afford any downtime in terms of the payment flows, which is what Ant Group provides for them. And in return, Ant Group gets a lot of volumes and also access to all those customers to create innovative offers. An excellent example of how complementary partnerships. One more example would be how Amazon acquired or partnered a grocery company some time ago. A grocery company was a typical brick and mortar company. Amazon obviously a world-class company in terms of online commerce, leverage each other's expertise to really kind of deliver a digital experience, combining online as well as physical aspects of channels as well. So again, great experience. I think when we look at partnerships, I could think of three key elements which are important in a partnership. One is complementary skill sets to the table. Clearly, we don't have BPC can provide the technology, but we clearly don't have the know-how of what Henry and the team has in their markets. Complement the resourcing, which can then, expand the thought and knowledge of everyone involved in that project. And number three, the whole aspect around market access as well. So these are some points I'd like to kind of quickly summarize.
Okay, well, I think we're kind of reaching the end of our timing. We've had one comment from there's not a question, but it's basically saying thanks very much for your time and effort. So I would like to second that. Henry, fantastic job managing to join in. I know that was a bit stressful at the beginning, but your inputs have been really appreciated and most welcome. Imran, thank you for putting those slides together and for being for BPC being a sponsor of this webinar. So gentlemen, thank you very much for your time. To anyone listening, of course, the handouts are there for download. And recordings of this project will be shown later on via email. So, gents, thanks very much for your time.
Thank you, Alex.
Thanks, Alex. Thanks, Henry. Well.